Hi everyone, and welcome to another episode of Rise High Live. Today I am joined by the wonderful Kristen Tunbridge, who is of course one of our wonderful mortgage brokers at Rise High, and Yusuf Matif, have I pronounced your surname? Mati, from Credit Repair Solicitors. Today we are talking about comprehensive credit reporting, or some people call it positive credit reporting. There's not much positive about it, so we'll call it comprehensive credit reporting. We're going to be talking about all the ins and outs so that you know what you need to understand. It is a really important topic, and it's about to get more important as time goes on. So it's really essential that you understand what it means for you, and it is impacting every Australian adult. So yeah, really important that you tune in and share this video with your family and friends, because there's a lot of good content that we're going to go through. Before we get into it, just a few little things. Obviously, we had the election on the weekend and it was a surprising win for the coalition, but definitely good news for homeowners and property investors. Our predictions are that property prices will rise over the next 12 months, not only following an increased confidence in the market following the election results, but also, it is expected that interest rates will drop in the coming months. And also the coalition's plan to introduce incentives and introduce a guarantee plan for first home buyers should increase demand from first home buyers. All in all, we're expecting that, demand for property will increase. And with demand increasing, we're expecting capital growth. So if you're looking for a property over the next 12 months, definitely get moving quickly and buy while prices are low. And I guess the other thing I'd say is that the coalition government are going to be giving all of us a nice tax cut. So every taxpayer should receive a nice little bonus. I think it's on average about $1,000 for a single and $2,000 for a couple. We would like to think that you're going to put that money to good use. So instead of just spending it, why don't you come along to our next property investment seminar on the 28th of May, I think it is, where you can actually learn what you can do with that money and actually put it to some good use, invest in your future, and take advantage of cheap property prices, cheap interest rates, and make sure that you're doing something good for your financial future. So that's all I'm going to say about the election. Also want to just give you an update. Last week we had the South Australian Mortgage and Finance Association Awards. These are the premier awards in the country for our industry, mortgage broking industry, and Rise High cleaned up. We took home 5 awards, including Best Customer Service, Best Finance Business, Best Mortgage Broker, a few others that I can't remember, but ultimately, this wouldn't be possible without our clients. We love you guys. Thank you for your support. Couldn't do it without you, and really, really proud to be able to continue providing value to you, and we will be here forever to keep giving you more and more value. So really grateful. Thank you to all of our clients and supporters out there. Also a reminder about our Rise High Rookies program. You know that we love, as a side thing, we love educating young Australians, giving them financial literacy skills and entrepreneurship skills that are going to help them in their life. So if you do know any schools or community groups and you'd like to organise a free session where one of our Rise High experts will come out and run an interactive workshop with the kids, we would love the opportunity. So get onto our website and book it in, and we would love to be able to engage with those children. So just a few reminders. I think that's about it. So I will now get on with the topic. So as I said, we're talking about comprehensive credit reporting, or positive credit reporting, how some people might say it. So what we might do is we might start at the basics and just really explain what it actually is and what it means. If you have any comments or questions as we go, please put them in the comments below. Or if you'd like them to be anonymous, you can email them to amanda@risehigh.com.au, and we will answer your questions as we proceed throughout the session tonight. So Kristen, let's start with you. What is comprehensive credit reporting? Oh, sorry, let's start even more basic. What is a credit score? Let's just start right at that point just to see, what is a credit score? What does it mean?
Okay, so a credit score, or otherwise known as your credit rating, is basically a numerical score, and that represents how trustworthy your reputation is as a borrower. So it basically sums up all the information in your credit report into one 3-digit number at a particular point in time. And it's calculated using private and publicly available information provided from yourself, but also other credit providers such as banks, telecommunication companies, utility providers, and also ASIC can get involved.
So at the end of the day, to the banks, we're really all just a number.
That's it.
So, and that's why obviously you need people like Rise High to be able to make sure that you're much more than a number. But so credit scores really, we all have a number. We all have a credit score, whether we like it or not. Why does it matter what your credit score is?
So basically, your credit score helps the lender determine your credit worthiness. So ultimately, at the end of the day, it helps them to decide whether to lend you any money. Ultimately, the higher your credit score, the more credit worthy you appear. Yep. So to have a higher credit score is a better thing.
Yep. So would you say that from a lending perspective, Australians with better credit scores have access to more finance options and cheaper finance
Correct.
options, and people with a low credit score would potentially not be able to get finance or only have very limited and expensive options to get access to finance?
Yeah, absolutely.
Okay, so basically, just to summarise, a credit score is a number. Each of us have one, and it's important because it impacts your ability to access finance and at what interest rates you will access that finance at. So, okay, that's pretty good. So, Yusuf, I'm going to go to you now. So we've had credit scoring all along, right? And we've had for a long situation where, we submit an application with a bank and the computer is the first one to decide whether the application should be approved, declined or referred based on just this number, this magical number. But how have things changed? What is comprehensive credit reporting? How has that impacted the change?
Yeah. So, as Kristen was saying, credit scores are, I will correct one thing, it can be up to 4 digits. We've seen in the thousands. So if you're really, really good, you can actually obtain those types of scores.
So that's what you've got to aim for, over 1,000.
Yeah. We haven't seen many, I'll be honest with you. But pretty much comprehensive credit reporting started 1st of July last year, 2018. Previously, credit scores were made up of defaults, whether you have defaults, too many inquiries, judgments. Those are the negative things that impact your score.
So pretty big things, like you'd have to have something pretty major happen in your life to have a negative thing on your credit report previously.
That's correct. And there was a misconception that you need to obtain credit in order for your credit score to go up. So you need to obtain credit, make sure you make those repayments, and your credit score will go up. That used to catch people off guard, and it ended up actually negatively impacting people. Now it is actually accurate that if you do have a financial account of some sort, your credit score is impacted by what's called comprehensive credit reporting or late repayment history. If you are late on any payments on any of your financial accounts currently, it'll affect the algorithm directly, and you'll get 1s, 2s, 3s, and so on against your credit score, which will affect you, we would say, more than what defaults and judgments have previously affected clients.
When you say if you're late on your repayments, what are you talking about here? Let's give some more detail around that.
Sure. So normally a financial account has a date that you must repay that debt by.
Yeah, so let's say you've got a credit card payment due on the 15th of the month.
That's right. So with comprehensive credit reporting, if you're more than 14 days late, it puts a number 1 on your credit score, on your late repayment history. Now that number 1 means that you were late between 15 to 29 days, and that will directly impact your credit score.
And you're saying that someone who is regularly late on
be
like
affected
on
more.
these repayments
Yep.
will be more greatly affected with their credit score than someone that's been through bankruptcy 10 years ago, or someone that has been through a major court, default or something on their credit report.
Very possibly, yeah. So credit scores are difficult because it is a case-by-case basis. Each person's credit score is determined by many different factors, not simply just late repayments and bankruptcies and things like that. But generally, if you have a recent late repayment compared to a, say, 4-year-old court judgment or default, it will impact you more.
And I think, this is pretty serious stuff because, traditionally credit reports have only shown up really serious issues.
That's correct.
Where things have gone into default and by a lot, and there's been court judgments and stuff. But there are a lot of people out there that can afford to pay all of their can afford to meet all of their repayments, but for some reason or another, life just gets in the way. That's and they're just constantly late with their repayments. This is really going to trip them up.
Yeah, I mean, what I'd like to say to that is it's great that, it's only financial accounts at the moment, because who hasn't been late on a phone bill? Who hasn't been late on a utility bill? But that is where the future is going. But phone bills and
utility bills, if you do, if you are too late on them, they can also impact your credit score as well, can't they?
But that's only through the form of defaults and judgments.
Defaults. So do you think that's where it's moving? Like, do you think that eventually we could get caught up on late payments on our phone and
I think it's definitely heading towards that sort of system. So people need to be very aware of that.
And you think about how easy that is. If you're moving house or
go on holidays.
Go on holidays or something happens to your mail, like how easy is it to miss your bill by 14 days? Like it's not a difficult thing to do. So it's pretty serious, I guess that means that everyone has to take responsibility.
That's correct.
For their cash flow and their facilities, and ensure that they're going to be fine moving forward. So with all of these changes, Kristen, what do you think this will mean for people when they want to borrow money? With these changes, when they apply for a loan, how is this going to impact?
Well, ultimately, with a lot more information being reported on, it's going to significantly impact your credit score a lot more than it ever has before. So the lenders do use your credit score as well as the information that you provide in an application and the supporting documents, your pay slips and things like that. They do use that credit score to determine whether or not to approve the loan. Yeah. And as we said before, it can also impact the interest rate. And the other terms of the loan, even the amount that they will lend you, can be impacted by your credit score. So it definitely plays a big part of it. Yeah, and
I think that I think there's going to be a lot of people in the future that are very surprised that their loans get declined instantly before even being assessed by a human because of poor credit score, and this is going to be the main driver.
Absolutely.
So it is a bit scary, to be honest. And that's why I said at the beginning, there really is nothing positive about it. So we're choosing to call it comprehensive credit reporting. But I guess the positive thing is that it does encourage everyone to take more responsibility over when their obligations fall due. We've got a few shout outs and we've got a question that's come in. So I might just pause there and we'll shout out to Rue, Ali, Twee, Sasha and Sarah. Thanks for tuning in, guys. Hope you're enjoying the session. And we've got a question from Rue. So thanks, Rue. Rue says, with credit card repayments, if you only pay the minimum, does that affect your credit score, or do you have to pay the full amount? That's a great question, Rue. Would you like to take this question, Yusuf?
Sure. So your minimum repayments are what is required. You are not required to pay any more than that. However, obviously, it is best to do so to avoid interest charges and things like that, I guess.
Absolutely. I mean, I would say I guess it's not a credit perspective, but if you're only able to meet the minimum repayments monthly, then you should really be talking to a great mortgage broker like Kristen to work out how you can get on top of that debt faster, because if you let credit card debt get out of control and you're only able to pay the minimum, then it can very easily and very quickly become
out of control,
and that can be quite a stressful situation. So I guess there's kind of two angles to that answer.
Right. Yeah,
so
definitely.
Yeah. Okay, great. Keep the questions coming. Thanks for that, Rue. Hope that you found that answer useful. So let's talk about, we've obviously sort of spoken about lending. So we know that this comprehensive credit reporting will potentially affect your ability to apply for home loans and investment loans and business loans in the future, what other areas of life can it impact, Yusuf? Because it's not just it's not just lending. Like, what other areas of your life can be impacted if your score is not
so I mean,
desirable?
We've had clients, due to a low credit score, actually be impacted for things as simple as getting a mobile phone or upgrading a mobile phone, connecting utilities.
So they've had mobile phones declined because of their credit score?
That's correct, things like rental. You know, some property managers will check your credit score. If you are late on your phone repayments or on your credit cards,
you might find it hard to actually rent a property.
They will look at you as a untrustworthy person, that you cannot pay your bills on time, so they don't want to rent to you. And what we see a lot of as well is people in business. You know, these are people that are successful in business and they want to take that next step in their business and obtain more finance for their business, or credit and, you know, personal loans, car loans, things like that, machinery. And they're not able to do so, and they're not able to take their business to that next level because their credit score is low, or it has been impacted by defaults, judgments, and also now we've seen comprehensive credit reporting. So
So it's not just lending that it's going to impact your life, it's, you know, a lot of other things that you actually need in your daily life. So everyone has to take this seriously, I guess, and make sure they speak up. And I guess you know, like, what advice could we give viewers today as to how they can improve their credit score? Do you have some tips, Kristen, on things that people can do to improve their credit score moving forward?
Absolutely. So obviously I think one of the most important tips we can give you is to make sure that you make all of your loan repayments on time, and also your bills. They obviously come into play as well. So it's really important. Maybe setting up direct debits is one way to do it, so it's all done automatically, or have calendar reminders for when they're due. There are some easy ways to do it just to keep on in control of it. Another one that can impact your credit is limiting the number of applications you put in for credit. So let's say you're shopping around for a home loan and you decide you're going to do the legwork yourself, and you put in 4 or 5 different applications within a really short period of time to, say, 4 or 5 different lenders. That will significantly decrease your credit score as well. So that's where using someone like a mortgage broker who can help you work out the best possible loan for your scenario, and just put the one application in for a pre-approval. We always encourage pre-approvals, but one is enough, not going around to lots of different lenders. Another good one is to potentially, if you have lots of credit cards like we discussed that are getting a little bit out of control, or a couple of personal loans, look at consolidating all of those facilities potentially into your home loan or into one loan, helping you manage your repayments and keep on top of things a lot easier.
Yeah, because multiple personal loans can actually negatively impact your credit score. So if you've got lots of unsecured personal debts, that's definitely something that you want to look at.
Yeah, absolutely.
And there's more risk of making a late repayment if you don't
don't
have those direct debits and things like that. So.
Yeah, that's really good points.
Yeah, and I think probably the last one is making sure that you actually are aware of what's on your credit report. You can get access, I think it's 1 free credit report per year. And just having a glance over it and making sure that everything on there is actually true and correct, and potentially disputing anything that you're unsure of. So
that raises a great point, Yusuf. How can people access their free credit report?
Yep, so you can go on, there's multiple institutions that have this information. There's 4 companies in Australia. They are Experian, Equifax, Illion, which used to be called Dun & Bradstreet, and Tascol. Now, Equifax is the major player in this area.
So that's the one that you'd recommend?
That's the one that we would recommend.
So if people go onto the Equifax website, will it be pretty clear to them as to how they can...
Definitely.
Perhaps we'll get the link from you and we'll post it in the comments below, so that if people want to access their, just actually have a go at accessing their credit report, they can. And of course, as your mortgage brokers, if you are clients of Rise High Financial Solutions, we can also get copies of your free credit reports on your authority. So if you want to contact us directly, we can help you with that as well, and go through that with you together, because even if you get your copy of your credit report, it can be a little bit complicated to really understand what it actually all means. So definitely that's something that we can help you with, or Yusuf can help you with. So that's great. So we've got a few more shout outs. Hi to James, hi to Ray, hi to Ben. Hi Justin, thanks for tuning in, guys. Really glad to have you here tonight. Please send through your questions or comments. We are going to be wrapping up in the next 5 to 10 minutes, so if you do have a question or comment, please get it in quickly. But I do want to touch on, I did have another question for you, Yusuf. What are people's options if their finances are a bit tight? And their credit rating is at risk. They know that things are getting a bit tight and it is a bit hard, and they know that they are going to fall into the trap of maybe some late repayments, or what are their options and what should they do?
Well, we work very, very closely with you guys. I think the first step is to come and speak to the experts here at Rise High. They can have a look at your situation and, like Kristen said, might be able to get you a consolidation loan or work it into your home loan, but your debts might be a bit too high to do that.
Yeah.
So we work together hand in hand to put you in a better position. Now, the major things that you need to do if you are finding yourself in financial difficulty is notify the creditors or notify the financial institutions. And again, you can come in and speak to your brokers.
Yeah, I would definitely, from my perspective, I would definitely recommend, I would hope that Rise High clients would come and speak to their mortgage broker first.
Yep.
Because their mortgage broker will be able to give them some really good advice as to what to do without having to alert the creditors at that early stage.
Right.
Would you agree, Kristen?
Yeah, absolutely.
And we have a way of, because we work for the customer, not for the bank, we have a way of being able to help the customer through difficult situations. I guess there does come a point in some people's situations where we do have to alert the lender.
That's right.
And what does that generally look like or mean? How does that all work?
Yeah, it's imperative to be quick and act quickly because, like I said, there's only a 14-day grace period. Okay, so if you are about to miss a payment, it's important to notify that creditor so that you don't get that late repayment history, because if you do get a late repayment, it might stop you from consolidating a loan or refinancing into that.
And if you know that you're going to be late, it's not enough to just call the creditor, is it?
It's best to do it in writing.
There is a process.
Yeah, so it is best to do it in writing. That way you have a record of it, and therefore if you do want to dispute a late repayment of some sort, you can rely on that.
Yeah. What if there's actually, people actually go and get their copy of their credit report and they find things on there that they think shouldn't be on there, or things that they're not sure of? What can they do in those situations?
Well, they can contact us and we can do a free assessment for them. If we believe that we can help them, we can assist them through that process. We can either give them the information for them to do it themselves, or we can help them with that process and alert the creditors of the errors that have been made, and we can help them with the credit repair process.
Okay, great. Well, we have tagged credit repair solicitors into the post today, so if you do want to get in touch with them directly, you'll be able to do that via Facebook, or you can contact us for their details. Also want to shout out to Pasha, Mick, Susan and Sam. Thanks for joining us, guys. And so I think we've provided a lot of really, really beneficial information tonight. I think the bottom line is, to protect your credit score, really, isn't it? So if we could I might just get both of you to just give a quick summary of what you think is the really important points, and then we might just wrap up for tonight. If there's no more questions, Amanda, we're all good. So Yusuf, what in summary do you think is the most important thing for people to take home tonight?
So we touch base on the free credit report. Make sure you keep an eye on that. At least once a year, have a look at your credit report, and if you can, even subscribe to Equifax, where you get alerts. Okay, that's when you get alerts when.
Is that free to subscribe?
No, it does cost $79.95, and that is directly to Equifax. But what it does is it alerts you to every inquiry that gets made, every access that is made, every default, every late repayment.
That's useful, because often I find that people don't realise that inquiries. They don't realise that what their actions are triggering an inquiry on their credit report.
That's correct, yeah.
So it's quite eye-opening once you sort of learn what is actually triggering an inquiry. So yeah, that's a really good tip. So free copy of the credit report. Everyone get your copy of your credit report, and if you're not sure how to read it or not sure how to understand it, then definitely come and speak to us at Rise High or Yusuf at Credit Repair Solicitors, and we can go through that with you. Kristen, what's your biggest take home?
I think just being aware of what can impact your credit score and just keeping on top of those repayments. It's really, really important.
I think that those points were fantastic. I mean, this is obviously a very complex topic, and we've tried to really simplify it just to the, the key messages to really drive home. But it is really important for you to take ownership of your credit score and to really be proactive in protecting it. And this is going to be more and more important as time goes on. So please, for your own sake, please make sure that you are managing this properly. And if you do want help, of course, we're always here to help you. We love helping people through all situations in life. So please get in touch with us. And we hope that this has been useful and informative for you tonight. And we look forward to seeing you next month on our Rise High TV. But another reminder is that we do have our property investment seminar coming up on the 28th of May. We'd love to see you there. That's next Tuesday, I think. Oh, that's coming up quick. So it's going to be great. And if you are interested in, doing something for your financial future, it will be really one not to miss. So please come along, register on our website. And we'll catch you next time. Thanks for tuning in. Bye.